This video is about balance sheets, so let's get started. There are 4 financial statements. The statements are prepared in the order of income statement, the statement of retained earnings, the balance sheet, and finally the statement of cash flows. In the material that follows, we'll be walking through the basic construction of the balance sheet. The balance sheet answers the question of what is the company's financial position at the end of the period. We will see the balances of the assets the company owns and the balances of what it owes. Then we see the company's equity. The balance sheet is the only statement that we cover that is as of one particular date. It lists the balances of assets, liabilities, and equity accounts at the end of the period. The ending balance of retained earnings flows from the statement of retained earnings to the balance sheet. Here we're going to look at Kent Boat's balance sheet. Let's start at the top. The first title or heading line of the statement is the name of the company, its official name. The second title line will be the name of the statement. The date line is next. It tells us the date of the statement. It is important to note again that the balance sheet is always as of one particular date. It is the balances on that date. The balance sheet is the only one of the 4 statements that we have that is as of one particular date. The other statements cover a period of time. We then see the column heading in thousands. This means that 3 zeros have been left off the statements. This is done to enhance readability. Other times you'll see it's in millions. I've divided the balance sheet here into 2 slides, the assets on this slide and the liabilities and equity on the next slide. I'm doing this so that you can see the numbers. Otherwise, there is just too much on the screen to see anything. Next, we see the top row of the actual statement after the headings. The balance sheet will always start with assets, always. Current assets are first. Current assets are those assets that will be used up or converted to cash within 1 year or operating cycle. There's a particular order that the assets are listed in. First current assets and then long-term assets. Current assets are listed from most liquid to least liquid. By liquid, we mean roughly closest to cash. Cash is always the first current asset. Many companies, like Kent Boats here, call their cash and cash equivalents. Next, we see accounts receivable net, followed by inventory. There may be other current assets on other companies' balance sheets. After totaling current assets, we move on to the long-term assets. Here we have property and equipment net, and we have other long-term assets. Finally, we arrive at total assets, which is the total of the current assets plus each of the long-term assets. Remember that the top number in a financial statement has a $sign in front of it, as do any later subtotals and the final total. Anytime a subtotal or total calculation is going to be made, you see a single underline. That means that the numbers above are going to be added or subtracted. At the end of the assets on the balance sheet, total assets will be double underlined to show that assets are complete. Then we move on to the liabilities and equity section of the balance sheet. Now we continue. Remember that this slide is a continuation of the balance sheet, not a separate statement. The first section on the second part of the balance sheet is the liabilities section. We start with current liabilities, which are those debts that are due within 1 year or operating cycle. Liabilities are also arranged from most liquid, meaning soonest due, to least liquid. Accounts payable is the first current liability, followed by other current liabilities. Next up, the long-term liabilities are listed. Total liabilities are calculated by adding total current liabilities in each of any long-term liabilities. Next up is the stockholders' equity section. Here is where common stock and retained earnings are, and possibly a lot of other accounts we may learn about in the future. We see the ending balance of retained earnings flow from the statement of retained earnings to the balance sheet here. We total the stockholders' equity accounts. Finally, we arrive at total liabilities and stockholders' equity, which is the total of the liabilities plus the stockholders' equity. At the end of this section on the balance sheet, total liabilities and total stockholders' equity will be double underlined to show that the total is complete. Total liabilities and stockholders' equity must equal total assets. In our case, it does. This is because the balance sheet represents the accounting equation, which is assets equal liabilities plus equity, which is exactly the format of the balance sheet. The balance sheet shows us where the assets came from. Were they obtained by financing or by equity? Okay, that's it. We're done with this one. This video was created and narrated by Dr. Wendy Tietz. Have a great day.